Hello and welcome to Elevate Your Wealth. I'm your host, Casey Elkins, co-founder and managing partner at Elevated Financial Management. We've got an exciting show for you today. I'm joined as always by my friend, father-in-law, and business partner, Mark Stimpson. Mark, I thought we were doing a financial show. Are we going to the beach?
Yeah, we're going to the beach. We're going to play in the sand a little bit. We're going to play in the tax sandbox for a while.
Right.
And I think these buckets are going to help everyone to really understand a little bit better about what could be coming and how to deal with that. And I know I love an illustration that you use at every workshop that we do, and we're going to talk about that. But yeah, we're going to play in the tax sandbox for a little while in this episode.
That's great. Well, looking forward to it. Green's my favorite color, so that one's going to be my favorite bucket there. And it just so happens to tie up with tax-free, so that worked out for me.
Exactly.
But before we get into the taxes of it, Mark, how's it going? How are things around the office? You know, what's going on at Elevated these days?
Yeah, we're busy. Let's just put it that way. We just did a massive expansion to our office. We added a bunch of more offices inside our building. We needed more space, so that's been really cool to get that done, and everybody's got their own office now. So, and we're excited because we're busy. We're pretty much now going to be teaching different types of classes, one a week, so 4 or 5 a month. So we want our viewers to understand that it isn't just here on TV that you'll see us. We're on the radio, as a lot of you know that watch our show every weekend. On a couple different channels, and then we're also teaching at the local colleges.
Right.
And we want, that's what we're about. It's about education and helping our clients to realize they don't have to be in this alone, right? We want to be a great resource for them. Call us up, ask questions. There's no bad question for us, right? So don't be embarrassed about anything you might want to know about. Please, just give us a call or email us, because we're here to help.
Yeah, great point, Mark. And you know what? Maybe it's a good opportunity for our folks at home. We do teach retirement classes at local colleges. We teach at various colleges in the area. If you'd like to see what the dates are, what the topics are, and you'd like to come to one, they're completely free of charge. Please go to our website. It's efmnw.com. We're going to have a couple other tools and things that you can use as well throughout our show today. But let's jump right into it, taxes, right? So, Mark, you've got these buckets here. We're going to talk about how to protect IRAs from Uncle Sam. It seems like he's always trying to get our hands on our money, or get his hands on our money. And so maybe tell us a little bit about the buckets and how they play into a strong retirement, a strong financial plan.
Yeah, let's just take this a few steps at a time. So a lot of us work really hard. And I know Casey would like to have a bunch of these hundreds, but they're not his or mine. And so...
You stole those out of my bag. I know you did.
And the bottom line is, this Tax Now bucket, a lot of us, we got a lot of money in that bucket, right? That's the money that we may have. We're got CDs, we're putting money in checking and savings. That's really what we call our non-qualified money. It's taxed as you go. Even, and I'm going to use the bank as a good example. Let's say I got a CD at 5%, and we know that's high right now, but let's assume that it is. And you get 5%, you got $100,000 in there, you made $5,000 for the year. No, not really, right? Because we got to pay tax on that money, even if we don't spend it. Okay, so that's important to understand how this bucket works. Now this bucket...
before you go on to the tax later, just real quick, because I think this gets missed a lot, right, is if you own, let's say, Apple stock or Microsoft stock or Costco stock, whatever it is, if you bought it at $200 a share and it grows to $250 a share and you sell it, that $50 worth of growth is taxable if it's in that tax now bucket, right?
And that's a good point.
That's the other piece to this too, right? Because we have a lot of folks in Seattle that have Costco stock or Microsoft stock or Amazon
Huge
stock,
gains.
Boeing stock that they've held for years and years and years, and they've had a lot of growth. And when they sell those funds, that's a taxable event at the moment that they sell it, if they hold it in that type of account. But if they hold it in the taxed later bucket, that's a very different conversation. So how does that one work?
Yeah, so again, so now the bulk of us and the bulk of the viewers out there, you're going to have probably the bulk of your money in what we call qualified. Remember I said this is non-qualified bucket. This is our qualified bucket. This is our 401ks, our IRAs. It could be a Roth, but I'm going to leave that separate. Even though it's qualified, taxes treatment is way different on a Roth, right? What about a 403b, 401k? So again, this bucket here, we have the bulk of our money. I'm going to leave one for the other bucket. So we put that money in there. Now, I love it at this point. I want Casey, because he uses an illustration in our workshops that's really going to drive home the point about being taxed later. A lot of us, we don't want to face that tax man, right? The boogeyman, right? He's going to come out of the closet. But it's sometime out of the closet in the future, right? And use that illustration. Help the viewers to understand, Casey, exactly what we're talking about here, because it's going to relate to this yellow money perfectly.
Yeah, I appreciate that, Mark. You know, I think that this is something that we really want folks to key in on, because so many don't realize the actual situation that people find themselves in. So to kind of highlight that illustration, as you said, you know, let's say you're looking for a house, and I know right now isn't the best time with interest rates where they're at, but just for the sake of illustration, play along with me. Let's say you're looking for a home and you find a beautiful home. It's in the perfect neighborhood. It's exactly what you need for you and your family. And so you go to the bank and you tell the bank, well, you know, here's my financials, my proof of income. Will you give us a loan to purchase this house? And they come back, they say, no problem, Mr. and Mrs. Customer. We're happy to do it. We're happy to give you that loan. Just one thing. We're not sure what the interest rate's going to be, so we'll let you know at the end of the 30 years, and you can pay us all the interest at that point. Who would do that? Nobody would do that, right? I would never do that. As a matter of fact, people go out of their way to try and buy their interest rates down. That's how important that is, right? Yep. So the key here, though, is with that taxed later bucket that you've got there, Mark, that's the case that people really find themselves in. Inside of your 401k, when you put that money in, you knew what the tax rates were when you contributed those funds, but you didn't pay those taxes when you put that money in. That money is taxed later. So you put that money in. When you take that money out in the future, my question to you is, what will the tax rates be? And the important point of this, or the thing that we want everybody to focus on, is we don't know what the tax rates are going to be in the future. We know what they look like right now, what they look like for the short term, but in the long term, especially when you're 15, 20, 30 years into your retirement, if those tax rates go up, which I have yet to have anybody tell me that they think tax rates are going down. If those tax rates go up, wouldn't it be better to have more money that you paid taxes on today and that grows tax-free for the future? And that's really what the green bucket's all about.
Yeah, that's just it. Most of us may have just a few dollars, if any. Some don't have any in the green bucket, but yet that's the bucket that's going to help us the most in the long run if we have that. In fact, we're working with a couple right now. She is a CPA. That was her background. The husband was an attorney. Now, they've done a good job of savings. And we're going to talk about how we're working with them now from a tax standpoint and the unique things that we've done. But they have a lot of qualified money. They got a lot of money in this yellow bucket. And the wife knows, the CPA knows what's coming. In fact, she told us she stresses about figuring out how it's going to be each year, and the planning that we're actually doing with them now and working with our CPA to figure out the best strategy for them. So this is the money that Casey's talking about. It's taxed later at a rate that we don't know what it is. But the green bucket is the bucket I'd like my clients to have the most in. This would be our Roth IRA money, right? That's one of the main tools where the green money comes from. But there's also a unique tool that a few people use, but a lot don't know about, and that would be income that's generated from life insurance contracts.
That's an interesting thought.
Yeah, specifically set up for income, not death benefit, but very few people understand or had anybody ever share with them how to do it and when to do it, right? Because you do need some runway for that to work. But the point is, you need to understand how each one of these buckets is going to be taxed, because if you don't, I love this point, and this is what we think about when we're talking with our clients. Here's an easy question. If your advisor hasn't asked you this question, you need to really think about this right now. Because here's the problem with a lot of the big firms. Right? And I'm not going to name any, but we know who they are. If you ask them a tax question, what do they usually tell you, Casey?
Go talk to your CPA.
Go talk to your tax man or your, like you said, CPA or tax preparer. We don't do that in our office. You need to know how taxes are going to affect your overall plan, because it's going to be the biggest piece or rotor of the money. But I love this question. This is what you need to make sure is getting asked. How much tax do you want your children to have to pay on your money, meaning the money that they inherit? And it's staggering how big this can be if you have too much money in the yellow bucket. And we're going to talk about that as the show goes on. So again, how much money do you want your children to have to pay in income taxes? Because the amount can be staggering.
Yeah, that's an important piece to the puzzle. It's something to consider, right? Because really passing money from generation to generation in the taxed later bucket, as Mark is highlighting, is the most inefficient way to do it. So if you'd like to figure out how to be efficient when you pass money to the next generation, how to make sure that taxes don't erode your retirement, pick up the phone, give us a call, 844-342-7142. We will sit down, have a conversation with you about what you want your retirement to look like and exactly how to make that happen. 844-342-7142. Don't change the channel. Come right back to Elevate Your Wealth. We're going to talk more about taxes and how they affect your retirement.
Call 844-342-7142 now to receive your complimentary tax map with your written financial plan. Learn multiple strategies that can protect you from higher taxes now and in the future. Taxes are a threat to your financial stability in retirement. Protect yourself from the potential threat of rising taxes. As a retirement planning financial advisory firm, Casey, Mark, and the team will help you navigate the financial waters to pursue your retirement goals. Call 844-342-7142 today. Casey, Mark, and the team offer inclusive retirement services, such as investment directives for your portfolio, income-producing strategies, and wealth preservation plans for your family and legacy. Call Mark, Casey, and the team at 844-342-7142 right now for your complimentary tax map with your written financial plan. Discover tax strategies to keep more of what you have saved in retirement, or use the QR code below to schedule today.
You've got quite an extensive resume. Wow, so many years of management. Bet that was fun. So this job requires basic knowledge of the social media and video platforms, content creation, and SEO. How proficient are you in those areas?
Going back to work after retiring is not ideal. Plan your retirement right. Call now for your own complimentary portfolio review and tax analysis. Welcome back to Elevate Your Wealth. I'm your host, Casey Elkins. I'm joined as always by Mark Stimpson, my friend, father-in-law, and business partner. And as I highlighted earlier in the show, today we're going to the beach, right? We're at the beach, Mark. I don't see a shovel to go with our little sand buckets here because you know what? Sometimes when you get yourself in a bad situation when it comes to the taxes of retirement planning, the shovel isn't big enough to dig yourself out, right? That really is the truth. Sometimes it's too late, but we hope that for our audience it isn't too late to figure out what taxes look like for you. You know, this is a great time. If you would, please take advantage of this tool. It's called taxableseattle.com. We've got it there on the screen. You can scan the QR code. This will give you a chance to take what we're talking about today and apply it specifically in your life to see what planning might do to help lessen your tax burden in retirement. Again, it's taxableseattle.com. We'd love to have you take advantage of that, something that we've made available for our viewers. But we're talking about specifically what can be done to lessen the tax burden in retirement, how to get money from the yellow bucket, the taxed later bucket, into the green tax-free bucket. And so we got a couple of things to discuss with that. Mark, what's the first one?
Yeah, so What I want our viewers to understand is we are trying to find a strategy to take that tax-deferred money that for most people going to be their 401k or their 403b or their TSP plan, and we want to show them and present a strategy where we're going to put all that money now in the green bucket. Well, it doesn't mean that you don't pay tax. We got to deal with the tax man, right? But here's something to really think about. How cool would it be? And this, I want to go back right now to a client that we have been working with for a little over a year. And it was some sophisticated tax planning. And she's the one I mentioned earlier. She has a CPA background. The husband was an attorney. But they have an estate tax issue. In Washington, we know anything over $3 million, including your real estate, which I want our viewers to think about that. When you put real estate into that number, it doesn't take a lot of other assets to get over the $3 million mark,
especially
right?
in our area,
Yeah.
right? Because real estate has skyrocketed
Exactly.
in Seattle. Yeah.
Now, you know, they've got, you know, probably close to a $10 million net worth. And so they are faced with a fairly significant Washington state inheritance tax their children are going to be dealing with, right? They're not, because they have to be gone, they have to be dead, but their children are going to deal with this one way or the other. So we're worked on a strategy where we're taking a big chunk of the wife's qualified 401k, and we're going to move that money over a 6-year period of time to lessen the tax liability each year. And she's the one that helped us determine how much we were going to convert each year to keep her in the bracket that she wanted to stay in. But we're going to convert close to $2.5 million. And what's cool about this strategy is this policy is going to be owned by what we call an ILIT, an irrevocable life insurance trust. And by doing that, we're moving the money out of the state total, right? It comes out. Now, we got to deal with taxes, and I'll get to that here in a second. But the bottom line is it's going to create tax-free money on the back end, a significant amount. And we're using a type of universal life policy that is sophisticated. We use premium finance we call it supercharging it, but it's going to create a lot more death benefit over time. And it's going to pass several $1 million more to their children, 100% tax-free.
Let me jump in on you, Mark, right? Because I don't mean to interrupt you, but I think this is really important. Now, you threw out some big numbers, right? You mentioned that their estate is a sizable estate, right? Is this type of planning only applicable to estates of that size? Is this unattainable for your average mom and pop retiree?
I'm glad you stopped me on that, because it isn't. It's a concept, and there's different types of insurances that can do different things. So this is where talking with an office that kind of specializes in tax planning, which we do, there's all kinds of strategies that can help do tax planning, and we try and look at the tax planning through the windshield. How can we help our clients see what's coming versus just giving our numbers to our CPA and he's doing it through the rearview mirror, right? We give him the numbers, he does a great job, he prepares our tax return, and then we pay the tax or get a refund based on our situation. But that doesn't help us with the long-term planning, and by doing some planning over the long term, we can maybe lessen dramatically the tax liability that's coming. In fact, if you're in a state that has a state tax like we do, if we pass money on to our children, this article made it very clear that you could be looking at a 70% reduction in the amount of money that our children will get. Now, I want to repeat that, up to 70%. Now, it could be less, of course, but the point is, if qualified money, when we pass it to the next generation, is probably the worst money that we can use to pass on, right? So you've got to have a strategy if you want to maximize this. So I just want our viewers to think about this, because there are ways to get the money from this bucket, the yellow bucket, to the green bucket, and all that growth, once it's in there, it grows tax-free.
Right.
right? So again, it'll be the best money that you have, but you've got to take action to be able to do it. Because once you become uninsurable, as we've talked about before, whether it be long-term care or life insurance, that option goes out the window. And that actually happened in this case because the husband was uninsurable. And if it wouldn't have been for the good health on the wife, we would never have been able to do the planning that we're doing right now.
Right, that is the case, and it's something that you highlighted a very strong point, that we have to be careful about when we give that money to our kids, right?
Yep.
Because oftentimes, as is the case, for you taking it out in your retirement, perhaps it's a 15% effective tax rate. So you're in the 22% tax bracket, let's say, but it's maybe an average of 15% effective tax rate. If that money goes to your children at that stage, chances are they're in some of their highest income earning years because they're in their late 50s into their 60s. And so they might be in a higher tax bracket. And when they inherit those funds, that gets stacked on top of the income that they already have. And something that's so vital to note is that if you inherit money from an IRA, when your children inherit that money from an IRA, they have 10 years to get that money out of the account. That means they have to pay taxes somewhere in that 10 years on that chunk of funds that you've given to them. So if you leave them $1 million, they might be lucky to get $700,000 of it after they pay the taxes on it. And we know that that's not what you want. That's what not anybody wants for their retirement, for the funds that they've worked so hard to build and save. So this is your opportunity. Please give us a call, 844-342-7142. We'll sit down, build a custom plan with you. We'll focus on the taxes. We'll answer those questions that you have to make sure that you're being tax efficient with your plan. We'll talk about the risks that you're taking and what you can do to lessen that tax burden in retirement through tax planning instead of just tax preparation. 844-342-7142. We're going to talk more about taxes and what you can do to save yourself in retirement right here on Elevate Your Wealth.
Recent legislation, the One Big Beautiful Bill, provided additional clarity around tax rates in the near term. That clarity matters. What it did not remove is legislative risk. Tax policy has changed in the past and may change again based on economic and political factors. While no one can predict future tax law, planning can evaluate how different tax environments could affect retirement income. We offer tools designed to help assess potential tax exposure while flexibility still exists. Visit taxbillseattle.com or scan the QR code to use our free tax calculator and see what the potential tax liability on your qualified retirement assets could look like based on current assumptions.
You've got quite an extensive resume. Wow, so many years of management. Bet that was fun. So this job requires basic knowledge of the social media and video platforms, content creation, and SEO. How proficient are you in those areas?
Going back to work after retiring is not ideal. Plan your retirement right. Call now for your own complimentary portfolio review and tax analysis.
Hello and welcome back to Elevate Your Wealth. I'm your host, Casey Elkins. We're talking about everybody's favorite subject, taxes, and what can be done to hopefully save you some money on taxes when it comes to your retirement, and specifically tax planning and how to go about that, because there is a big difference between preparing taxes or really just recording history, what's happened over the last 12 months in your life, and filing those taxes versus what can be done today to save you money on taxes over the next 15, 20, 25, 30 or more years in your retirement. And so we're talking through a couple of strategies. Mark, we're going to call you the bucket master for the rest of the day. We've got these 3 buckets here in front of you, and we've been talking about how to get money from taxed later into tax-free. And there's one that we haven't talked about yet that I imagine most of the folks at home have heard of, but perhaps have not taken advantage of, and that's a Roth conversion.
Yeah, I'd like to maybe start by saying, if you have a company that you work for and you have the ability to put into a 401k, you've got to do it. We're not really big fans of 401ks if there is no match. I think IRAs can serve a better purpose. We can't put as much into an IRA as we can a 401k, but if we're not getting any free money from the company, well then our options for how we invest inside the plan are limited, right, compared to an IRA. But the other thing I want to mention is some people are not asking if they have a Roth option inside the 401k, because I think you and I would agree. I would tell most clients to put as much into the Roth bucket as they can, because that's this bucket right here.
But you know, that's the most painful bucket to put money into.
It is, because you don't get the deduction. You pay the taxes up front. The tax-free portion, I want to make sure everybody understands, it's not the money going in is taxed. We all know that. But all of the growth is going to be tax-free. And that is a big thing when you think about compounding of interest over time, right? All that growth is going to be not taxed, and that's a big, big deal. So maybe you don't have any Roth money. How can I get some into the green bucket? Well, we can do conversions. The other thing that about conversions, or contributions, I should say, they're limited if you, depending on how much money you make. Some of us can't even put into a Roth plan because our income is too high. So if that's the case, well then there's some other options that you can do. You need to talk to us about that. But maybe you've got a 401k, you want to get some money, pay the tax at a known rate now, right? So I want to take money again out of my tax later bucket. I'm going to get into I'm going to pay tax now, and I want to get it, and I'm going to convert it and put it into my green bucket. How do I do that? Well, a lot of plans, again, but it's got to be done strategically, right? Because we don't want to bump up too many brackets, right? Because all the money that we take from this bucket to put in this bucket is going to be counted as income for the year. So you have to look at your current income sources, for if you're married filing jointly, both sources, because we don't want to do it where we go up maybe to the top bracket. That doesn't make a lot of sense. So you've got to do this strategically. But that's a cool tool that you can use to pay tax probably at the lowest rate you're ever going to see. And that's because most of us want to keep kicking the can down the road, right? Because we don't want to face the tax man. But that can backfire in the long run. And that's why we do a lot of Roth conversion in our office for this very reason. We want to take the tax rates. I think we would agree they're as low as, I mean, it's a fire sale now. We would get those grants.
My thought is they're probably as low as they're going to be.
I believe that too.
We teach retirement classes, right? And every time we teach a class, we ask the class, do you think taxes are going up or do you think they're going down? And not a single person has said that they think they're going down, right? Now, maybe in the future I'll stand corrected on that. But the truth of it is, based on the debt of the country, we think taxes are going up. And the experts agree with that, right? All the doctorates, the PhDs of finance believe that taxes are going up. And so the truth of it, the sad reality is, when it comes to taxes, you are going to have to experience some kind of pain, whether it be today or it be in the future when you start taking that money out. We would rather see you experience the pain of discipline instead of the pain of regret. And if you are on that path and you would like to figure out what that looks like for you, please dial 844-342-7142. We will sit down and have a conversation with you about what that future could look like, what you can do to lessen your tax burden, how to create income for yourself while still being tax efficient and making sure that you're not taking too much risk as you move into your retirement. 844-342-7142. As always, it's our pleasure to be here with you each and every week on Elevate Your Wealth. Thank you for letting us have a small impact on your life. We'll see you here again next week.